Good morning, everyone. Today we're going to continue our discussion of time series. Last time we began learning how to make use of a very powerful package called Quant Mode. Before anything else, I hope you have loaded the packages. These are the packages that we are going to use, including Quant Mode. So let me load this. Okay. This is a combination of install and load. This function from Pacman. All right. So once we have loaded the package, okay, we can now make use of the functionalities of Quant Mode. Quant Mode allows us to download many data from Yahoo Finance, are you familiar with the Fred database, class? May I have your chat, please? Are you familiar with Fred? No, okay. How about the others? No? Okay, thank you. There's also a question here. Are we going to have an assignment with it will be more of a case, Christian, not really an assignment, but a case. Cases, actually. Your cases will be, of course, it will be based on R. Okay, my question a while ago was the Fred database. So let's just take a look at, open your Google, plus your search engine, and then type Fred here. Fred, enter. And the first one that's listed in your search engine in Google is this one, Federal Reserve Economic Data, Fred. Now, Fred contains 800,000 plus, okay, time series data. So let's open that. This one, class. This one. So Fred, economic data, and it contains data on GDP, inflation rate, CPI, inflation, money, how do you call this? M2, money, I'll get the term, okay, unemployment, etc., from many, many countries. Okay, so it would be good for you to explore. Okay, 825,000. Imagine having this at your disposal, US and international time series from 114 different sources. So you can tap into the wealth of information coming from Fred. And the good news is Get Symbols can access data from Fred. We'll have an example of that. It's not only Yahoo Finance where we can get data, we can get other sources of data. Wanda is another one. Okay, let's just type that. Wanda. However, there are limitations in getting data from Wanda. So this is Wanda class. Okay, Wanda, currency converter. So Wanda is a good source of currency. Okay, all right. However, it's limited here. There are other sources. However, you have to create an API or you have to register with that company. You have to set up an account. You can get some free data, but not all. Some data are you have to pay for it. Okay, so that's just some of the things that we can access or we can download data from and making use of quant modes, R's quant mode. Okay, so last time we learned how to, for example, get data like Apple stock, and the default here is that you're getting data from Yahoo Finance. Before, you could get data from Google, but that let's say provision or that link has already been stopped. So you can no longer get data from Google Finance. So this is all from Yahoo Finance. So even if you don't identify the source, okay, the default is it will get data from Yahoo Finance. So as long as you know the ticker symbol, so this is just like the ID of Apple in the market, in the stock market. So if you know the ticker symbol, you'll be able to get that. And we said last time that the default is if you get data from Yahoo Finance of a particular stock, it will default to if you don't identify the date, then the default will be uh, January 3, I think, 2007. So it's a moving target. When I say moving target, on a yearly basis. So if you, let's say in May or in June or later down this year, if you download prices, it will still be from January 3, 2007 up to the latest trading day. Okay, if you're interested in getting previous data, you can do that by identifying, which is what we did last time here, from, all right, and up to. In fact, you can add here another layer, SRC is equal to Yahoo. Okay, so it just tells us that this is coming from Yahoo, but no, actually no need to write this because the default is really Yahoo. If you're getting it from Fred, then you have to identify source is equal to Fred or Wanda, or for that matter, any other source. Okay, so we looked at this last time. This will give us a, so let me run this, for example, get symbols, and you're getting Meta and Tesla. Okay, Meta is Facebook, Tesla is, Elon Musk's Tesla. If I run this, okay, as long as I have loaded quant mode, then we will be able to take note of this. It generates this data. It contains the data from Meta and Tesla. Now, if I check, let me just check what's the structure of Meta. Okay, structure of Meta. Control Enter. All right, we studied last time that this is an XTS object, extensible time series. Okay, and then the beginning date is May 18, 2012, up to January 23, the latest trading day, which was yesterday. Okay, it's double, which means the uh, the figures here are numerical, containing 3189 rows of observation and six columns. The columns being open, high, low, close, OHLC. Okay, OHLC, and then the volume, and then the adjusted price. Okay, and we said last time that what makes the XTS object distinct from data frames is that the index is your date. This makes crunching the data or working with the data, with this time series data, a lot easier. I've experienced before when the XTS objects were not yet quote unquote developed. We have to have a column here for date, and sometimes it's really difficult to work or crunch the data or to navigate through the data if your date is part of the column, part of your variables. Okay. All right, so let's continue. Okay, we said that this is a more something's wrong with this one. Maybe my spelling of Yahoo. Let me, okay, is it, sorry, I don't have a comma. That's what's wrong. Okay, there. So I'd like to load to my computer, Dow Jones, DJI. This is the ticker symbol for Dow Jones. It has a caret DJI. Okay, if you don't put the caret, then it will return an error term because the ticker symbol is caret DJI. Okay, then I specified the date from to. I specified also the source, which is Yahoo, and then daily periodicity and auto data assign is equal to false. We discussed this last time. We said that if you would want to give a name to the data, okay, because R will default into the ticker symbol. So if I didn't put a name here, the name of the time series object would have been DJI without the caret, okay? Without the caret. So this auto.assign is equal to false is used if you want to give a name to the time series that you're loading from quant mode. Okay, so what will happen here is that a a time series data will be created, will be generated, will be downloaded from Yahoo, and it will have a name DJIA and not capital DJI. Okay, so if I run this, okay, so you can see now that an object was created, time series object, XTS object, and it contains the data that we defined it to have. It's a daily data, and the name DJIA was assigned to it. All right, so that was what we did last time. Okay, and we also saw that we can download data that's monthly. Okay, so could be weekly, etc. All right, then I think we also discussed getting the mean of your data. Okay, so this one, okay, uh, we okay, we would like to generate a in the DJIA object. We're adding we're adding sorry we're adding this one, log closing price, okay, does not exist in DJIA here. DJIA contains open, high, low, close, volume, and adjusted. So I'm going to add a column here. Okay, and you do that by identifying the object and then dollar log close. This means that I'm going to add a column to DJIA. And what's that column? It's the logarithm of DJIA, DJI close. Okay, so what will happen is that R will get the log of each of this of the closing price and put it here as a column and give it, and the name of that column is log close. Okay, so take a look at this. DJI, that's our object that's existing. Dollar log close, it means that it's going to add another column. Okay, if this was class, if you place here DJI close, then what would happen is that it will replace the existing column DJI close. Okay, if I place here dollar DJI close, and then it will be the log of DJI close, what will happen is that it will DJ close. Okay, we should have named this DJ close. Okay, if I placed here DJ close, okay, then it would it would have replaced that existing column. All right, so if I run this class, Control Enter, all right, you can now see that DJI here has, as expected, another column, and it's called log close. All right, then to compute for, what we did was to compute for the log returns. And the log returns class is uh, is obtained by getting the log of each of the prices and then subtracting, okay, consecutive data. All right, so we now have this DJIA. This another column was added. Okay, so there are now 7 total columns instead of 6. So what will happen is when we get the difference, so this minus this, okay, this minus this will give us a certain figure. This 9.7 minus 9.72, etc. So what will happen is that for the last one, 9.3367 minus 9.336, that will be the value here. And 9.336346 does not have a previous value. So this will become NA. Okay. It will become NA because we're asking R to get the difference. Okay. However, there's no previous value here. So if we do this here, so what's this class? This is now a new object, DJIAR. Okay, this is not no longer DJIA. Okay, or if you want, you can. What we could have done was, okay, we could have named it DJIA. So that means the same object and then dollar and then maybe log ret. You could have done that. Okay. If we do this class, then what will happen is that DJIA will have another column, and that column will be called log ret. Okay. In this code, we're creating a new object. Remember, this is the one on the left side of your assignment operator is the object. Okay. And you know that you don't have a DJIAR here. So which means that you're creating a new object, and this object it takes the difference from DJIA log close. So that's what this means. Okay. So if I run this class, run, you can now see that we have a new object here, DJIAR. And if I open this, view this, okay, there you go. And it's a difference between the dates. And this class is actually your log returns. So how do you get your log returns? So the long way is to get the log of each of the values there and then get the difference, okay, between the dates. And as I said, there will be an NA here. Now, in order for us to work with this data, this log DJIAR, and for example, get the standard deviation of this, the mean of this, there should be no NA values in your data. If you get the mean, okay, so let me just put it here, mean of DJIAR dollar, okay, log close. Because DJIAR is the object, okay? What we want to get is the mean of your column. The column is log close. Okay? If I get the mean of that, what will be the answer? NA. Why NA? Why NA class? Because you have an NA value there. And this is a good thing because R will force you to inspect your data, take a look at your data. So one cause of this NA is that there's an NA in your data. So you'll have to deal with that. So how do we deal with that class? Okay, you can you can just remove, okay, just like this one. So DJIAR and then remove. Okay, since you have only one, you're only dealing with one column. Okay, only one column. This is your DJIAR. Okay, the square brackets here actually is used for subsetting, okay, for getting some portions of your data. Since you have only one row, one column, then you don't need to identify the rows or the column. Okay, so here I'm removing -1, the first row. So this is the first row. Control Enter. All right. So what do you have now? If I take a look at, I'm sorry, what did I run? I should have run this. Sorry. Here class DJIAR. Okay, let me check. Double check. Okay. It already ran. Okay. So the first column was already deleted. So if I go here, class, and then arrow up, and then get the mean now. So I'm redoing this. Mean of our object DJIAR, the variable is log close. If I run this, control enter, then we are able to get the mean. Okay, let me pause for a while. I think that was a past review. Any questions, class? Any clarifications? I have your feedback, please. If I went too fast and you want me to repeat a certain portion there. Feedback, please. Thank you, Bianca. Okay, Kate, thank you. Let's wait for the others to answer that. Francis, thank you. Okay, good. And thank you so much. Adam, Katrina, Sam. I hope everybody's able to follow the discussions. 1, 2, 3, 4, 5, 6. Only six comments out of 24. So that's only 25%. How about the others, class? Okay. Okay, good. Thank you. Thank you. So let's now go here, class. Uh, did we discuss this? Okay. Let's first go to the plotting. So let's take a look at this. I want you to write this code. We can make use again of the plot function. Then what are we plotting? From the DJIA, which is this one class, and take note there are already 7 columns here. DJIA, not the DJIAR. Okay. Take note that we have several objects here already. So DJI dot close. Okay, is that existing class? DJI dot close. Okay. Now take note that DJI close. Okay, we can double check that. We can just type class DJI dollar. Okay. If you type DJI a dollar, it's not again DJI a dollar. Okay, no intelligence. Why not? That should appear. DJIA. I wonder why it's not appearing. The intelligence should appear. DJIA dollar. Okay, DJI. All right. Although in the in the data class, this this seems to be DJI. Okay, let me check class first because the name, the spelling is very important. DJIA. So I'm going to use the head function. Control Enter. Okay, there you go. So now we can see that the first 6 observations coming from DJIA are open, high, low, close. I just wanted to check the name of the variable. Okay, because here you don't really see the dot here. Okay, and R is very particular about naming the variable. So it's indeed DJI dot close. I just wanted to make sure of that. So I had R print the first 6 first 6 observations using the head function just to make sure. All right, so let me go back here. So this is the correct spelling of the column. So I'm asking R to print DJIA, in particular the closing price, and I'm giving the plot a name. Main is equal to DJIA closing prices. Then type is equal to N. We explored that before. And you can use type is equal to O. Okay. And then, okay, so let's plot this first. Control Enter. Figures are too large, okay, which means that we will have to increase this. Okay, there. Now, you notice that the lines do not appear. So we will have to include this lines DJI dot close. Okay. So if I run this, I run everything here, control enter. There you go. Okay. So let me share this code chunk with you in the interest of time. Okay. So run the whole code chunk. Either you can highlight everything and then control enter, or you can, however, you might have a problem with, because we can't see the we can go here and run the current code chunk, this one. So you get this. Let me delete this first. Okay, and then I go here to this code chunk, run the current code chunk, or control shift enter. So it will run everything inside this code chunk. Okay. Run current chunk, control shift enter. Right. I think it's asking me to highlight everything. Run. Okay, why? Why isn't it running? Let me use control enter. Okay, there. I wonder why this isn't running. This is run selected line, so you have to choose the line. Here, this is the current chunk. This everything here is your chunk. But when you run this, okay, run current chunk means this is your whole code chunk. So it should be running. But I'm wondering why. Let me again delete this and let me check. So you go anywhere here, you are in this code chunk. Okay. So if you ask R to run the current chunk, this is the current chunk. So that should run. Run current chunk. But it doesn't. Okay. Anyway, I'll just use I'll highlight everything and then run. Okay. Run selected lines. The lines I selected. There you go. There. So strange. Huh? Okay. I don't know what happened, but that should run when you run the current chunk. Okay. So pause for a while, class. Were you able to follow this? Were you able to generate your code? I mean, your plot? Okay, waiting for your response. Thank you. Okay, so you can see here the movement of the stock. We're plotting this is the price. These are the prices, class. Okay, these are the prices. So we're tracking the movement of the prices. This was during the global financial crisis. You notice how it really went down to the lowest from this 10-year history. Then it's recovered. It would be interesting to see what happened during COVID. Maybe let's do that, class. We can. Yeah, this already includes COVID. That's GSPC. So let me adjust this one, class. Um, this one, we can make it 20, say, maybe 2024. Okay. And April, we don't have April yet. Let's make it January 1, up to the latest date of 2023. Okay, I'm just changing the the date plus because I want to see what happened during COVID. What happened to the Dow Jones Industrial Average? Again, I ran this, okay, and notice that our DJIA will change, of course. So it will no longer include the log of the closing price that we computed a while ago. This is a totally different, a new DJIA, and the ending date is now December 23, December 29, 2023. Okay, we said that it should be up to January 1, 2024. However, there was no trading at that time, so it defaulted to the next, to the previous latest trading day. So we can now plot class, plot, same thing here, plot our DJI close. Okay, let's once again highlight this, Control Enter, and there you go. So you can now see that this was during the global financial crisis, and then 2019, 2022 here, this was during COVID. The effect of COVID on this index, Dow Jones Industrial Average, was not so much as during the global financial crisis. Okay, this was during COVID, and in fact, the impact of there was a crisis also in the U.S. during the 2019. Okay, it had more impact as compared to the during the COVID period. Okay, now these are stock prices. Now, what happens if we plot the stock returns? Okay, we still have our DJI, DJIAR, right? This is DJIAR. Okay, these are the returns of DJIA. However, take note that it's not. This is only up to 2016. Okay, but nevertheless, let's just plot this. Let's plot that one, the original DJIAR, and again highlight this. Okay, I think because in the interest of time class, okay, I'll just share this with you. Okay, so when we run this, highlight, Control Enter. Okay, now you can see the difference between between your stock prices and your returns, log returns. Okay, so very different class, right? And you can see that what we're going to model in this class are returns. What's modeled in finance is really the returns and not really the prices. And you can see here that we're going to use a model, a process called ARIMA, ARIMA, autoregressive integrated moving average. And we will see how we can model this. The problem that we will be having with this is this volatility clustering. Okay, this one class. We will be having problems with this one. You notice the volatility clustering. This was during the global financial crisis. This was the this is another clustering. Okay, so we should have included up to 2024. But you notice that there are some periods where there is clustering, volatility clustering. Volatility clustering occurs when when there are incidents or when there are circumstances or happenings that really affect returns. They affect stock prices, and of course, when stock prices are affected, returns are affected. Okay, in this particular diagram plot, you have this is during the global financial crisis. Okay, and when we say volatility clustering, it's the tendency of returns to keep on increasing and increase, keep on increasing. Okay, so that because of that, this happens, or they keep on decreasing. Okay, so this happens. So that's your volatility clustering. And later on, we will learn that the ARIMA, ARIMA process is not equipped to handle volatility clusters. Okay, so that's why after learning ARIMA, the next thing that we're going to learn is GARCH. GARCH, which is conditional, generalized, uh, autoregressive conditional heteroscedasticity, is a model that's able to capture this volatility clustering. Okay, so we take them together. All right, so let me go back. Okay, so this one class is just okay. This is Standard and Poor's GSPC. Take note, it has a caret. Usually, the indices in the U.S. stock market has ticker symbols that include this caret. Okay, so if you, I'll give you a few seconds to run this for practice class. So get symbols, GSPC, source is Yahoo. From, let's start with January 1, year 2000, Millennium Bug, up to 20, 2024. Let's make it 12/31, up to the ending of 2024. Periodicity, here it's monthly. Maybe let's make it daily. Daily. And then auto.assign is equal to false, which means that we're going to create this object. Okay, so why don't we do this? Let's remove this. Okay, and we did this last time. We said auto.assign is equal to false. However, you're not putting an object there. Okay, so what will happen here? If we run this, hmm, okay, what happened to my, I'm not seeing my, okay, anyway, I just highlight this. Let's see what happens, class. Control enter. Again. All right, there it is. Here, class. Okay, what happened, class, when when we assign auto.assign is equal to false? What happened here? The prices are here, class. The prices are here. Okay. However, we don't have the object here. In your case, class, do you have the object of GSPC? May I have your feedback, class? Maybe you're still writing. I'll
Sir,
give you.
wala po.
Wala, no? O bakit kaya class? Nag-auto.assign is equal to false, false tayo. And it did not create the object here. It printed it in the console, yes. But you notice that auto.assign is equal to false, okay, which means that it's not going to uh, give it this name, okay, and nothing happened here, class. No GSPC was created. So when you use this auto.assign is equal to false, just make sure that SP500, so I'm going to give this a name, alt minus, alt minus. Mhm. Something's, I seem to have a problem with my keyboard. Why is alt minus not working? Anyway, I just manualize it. Okay, so I'm now giving it a name as SP500, and auto.assign is equal to false, which means automatically R will give the name to the data set, to the time series of GSPC SP500. So let me run this, Control Enter. Okay, so there you go. So there, SP500. Okay, if I, okay, if I remove this, okay, and then I remove this class, so that's equivalent to making it auto.assign is equal to true. I remove the auto.assign is equal to false, which defaults into auto.assign is equal to true. So what do you think will happen here? No auto.assign is equal to false, but automatically it will be auto.assign is equal to true because that's the default class. Okay, if I run this, Control Enter, okay, you notice that there is now an object here of GSPC. And you notice the name is GSPC without the caret. That's the name of the object. And it's exactly the same as your SP500. They're exactly the same. All right. So let me pause for a while, class. Are there any questions? Any questions so far, class, about the get symbols?
Sir,
Yes.
yung sa ano po, GSPC, ano ulit yung purpose ng up arrow? Up arrow, tas GSPC.
Which one? Sorry.
Yung sa get, kanina po, yung sa get symbols, ano po yung purpose ng up arrow? Yung parang caret symbol, they call it.
This one, this one. This one.
Hello, sir.
Are you referring to this one? The
Yes po.
caret here?
Yes
Okay.
po.
Thank you, Christian. Thank you for that question. This one, class, is the ticker symbol of GSPC. Let's try, okay, let's try. Okay, I'm going to remove, let's remove GSPC class. RM, we have GSPC here, class, right? Just to make sure that here, right? RM, GSPC. I'm going to remove GSPC. Control Enter. Okay, there. No more GSPC here. Now let's try to run this. Get symbols, GSPC. Same thing. Okay. So let's run this class. Control Enter. Okay. What happened? Error in get symbols. Okay. Unable to import GSPC. So which means that R didn't understand just GSPC because every stock traded in the stock market in the US Okay, if you're going to access that, you'll have to use the correct ticker symbol. Now, what I don't know what was the purpose, but what they did, what the US stock market did was to separate or to differentiate the indices from the stocks. Okay, you notice that for Apple, we just use AAPL. For Microsoft, MSFT. For Dow Jones, we use Caret, right? We use Caret, then DJI. Okay, where was that? Here, class. Caret DJI. If we removed the caret there, it would have returned an error term because the correct ticker symbol for DJI or for GSPC is caret GSPC. So we tried getting GSPC, downloading GSPC just without the GSP, without the caret, and it said unable to import GSPC. But if we put the caret here, okay, shift 6, there you go. Let's see again if this will run. Control enter. Okay. Okay, wait. Okay, something's wrong. Where is that? GSPC here. Okay. Caret GSPC. And then did I miss out on something here? R control enter. Okay, there. Okay, GSPC was already created. Was created here. Okay, so it's just the ticker symbol. It's just it's what the stock market, American stock market did. It's the name that they gave to GSPC. It starts with a caret. So we have no we have no option but to use the ticker symbol that they gave it to. Okay. Christian, did that answer your question?
Yes, sir.
Okay. Ganun din sa DJIA, no? Okay. All right. So here we will not class, we will not anymore. Okay, maybe. All right. Could you please tell me if I provided this with you? This one class, I leave you to this other time series plots. I'll leave you to. Did I give this class? Example 5, was it in your, is that part of your, no? Okay. But the text class, this one, did I give this, did I give this class? El Nino fish population. Could you kindly check the notes that I provided you with? Okay. So I gave the notes. Let me give the code. So please copy this and put your note to your R, and then please run it on your own. Okay, we will skip this because it's just a plot anyway. Okay, and I leave you class to as an exercise for you to do it. Okay, so this one, and then also this one, magnetic resonance imaging. Okay, all right. Oops. Control C, and then Control V. Okay, I just want to mention something here. All right, maybe let's just run this anyway. Okay, because here you have this function par, okay, par mf row C12. What does that mean, class? It simply means that you can see that there are two plots here, plot 1 and plot 2. You have SOI and REC. So this one, par, it means to partition. Partition your plot, okay, 1, 2, which means one row and two columns. So that's what this means. Okay. Partition MF row matrix row, one row and two columns. So what will happen is that you have a plot where you have one row and two columns. That's just about it. Okay. So if I run this, control enter, so you can see here that Right? So this is your Southern Oscillation Index. This is your R, Recruitment Index, REC, Recruitment and Southern Oscillation Index. And you notice that the plot was printed in one row and two columns. So that's what this means. Okay. Partitioning your plot because you have two plots here. Okay. The plot SOI and the plot REC. Okay. So that's this is just an additional information for us. And the same thing here. Sorry, that was your, so this is your SOI and REC. And for the next one, again, you have a partitioning here. Partition MF row is equal to 2 to 1, this time, 2 rows and 1 column. Okay, you have here two plots again. TS plot, this one for the cortex, and another TS time series dot plot for thalamus and cerebellum. Okay, so let's run this. And the plot will be two rows and one column. Okay, control enter. Okay, there you go, class. See this? Two rows, one column. Okay, cortex and thalamus cerebellum. So these are medical time series plots. And the plotting was controlled by this. Par MF row is equal to 2, 1. Okay. The other one a while ago is 1, 2. One row, two columns. All right. So I think I provided you with these notes, right, class? We'll start with this. So we're now starting with our ARIMA class. So the previous lessons were just introductions to time series. You have different behaviors of time series, okay, different plots. So the objective is for us to be able to model, but we will we will focus on modeling stock returns. Okay, we're not going to model other types of data, but since this is finance, we will focus more on applied finance, which is modeling with stock returns. But of course, if you know the principle, behind ARIMA, it doesn't matter what type of data you're plotting. It can be business sales, it can be population or whatever type of data you're looking at, then the same principle follows. All right. May I know, class, if I share this with you in your notes, this one, time series statistical models? Kindly check, please. Do you have that? This one, class. Time series statistical models. Yes, okay, good. So let's just read through this quickly as a continuation of our discussion. We're now moving towards understanding a model that we can use in order to plot or to a method that we can use in order to model time series. So what's a primary objective of time series analysis? Develop mathematical models that we can use in order to describe the character of our time series data. And aside from that, is to be able to predict your time series. Okay. For example, we may consider a time series as a sequence of random variables, x1, x2, x3, etc. Okay. Random variable x1 is the value taken by the series at the first time point, and then so on and so forth. Then x2 will be the value taken at time 2. x3 will be the value taken at time 3. So the convention is to display a time series graphically by plotting the values of the random variable on the vertical axis. And on the x-axis is your time series. Okay, x-axis will be your time, y-axis will be the value of your data. whether it's GDP, GNP, stock return, stock price, etc. Okay, so we're going to focus on a model called ARIMA. ARIMA here, class. ARIMA is, okay, let me start with defining what ARIMA is. ARIMA stands for, okay, let me put this below this one. Okay, ARIMA stands for autoregressive. Okay, autoregressive AR, integrated moving average. Okay, so that's the meaning of ARIMA. AR stands for autoregressive, MA stands for moving average, and I stands for integrated. All right. So there are many types of ARIMA processes. AR1, okay, means no presence of MA. Okay, it's either it's only AR, or it's only MA, or it's both. Okay, or it's integrated. So you see here examples, basic examples of an ARIMA process. An ARIMA process can be just an AR1 process. Okay, I'll explain what AR1 means. Or it can be MA1 process. Or it can be both AR and MA. So you now have here 1 and 1. The one here, the first one here refers to your AR process. And the one here refers to your MA process. Okay? And you have here ARIMA. So for ARIMA, okay, you have 1 for your AR process. The last one, this one, is for your MA, and the middle one is for your integration, integrated. Okay, so let me just repeat, okay, for us to again know what this is. These are types of ARIMA process, class. And ARIMA can be an AR1 process. Okay, so you oftentimes you'll see AR, and then P. P stands for the order of your AR process. And then it can be MA. So it's designated as MA and then Q. There. ARP, MAQ. Q stands for the order of your MA process. AR stands for, P stands for the order of your AR process. Here you have ARMA, okay? Combination of AR, autoregressive, and MA, moving average process. So this is your ARMA, P, comma, Q. Okay, so we're just looking at the nomenclature first. We will learn about what is an AR process, MA process as we move along. All right, ARMA, PQ. So sometimes you might see ARMA. Okay, ARMA. Sorry for I will have to replace my lost digital pen. So difficult to write via the mouse. Okay, 3. So you can see here 3, for example, 2. So what does this mean? ARMA 3-2. ARMA 3-2 indicates that you have an AR process of order 3 and you have an MA process of order 2. Okay? ARMA 1-1 here means you have an autoregressive process with order 1. I'm saying order, okay? ORDER. And MA here, order 1 also. Okay? All right. Here we have ARIMA, but this time there are 3. Okay, so you call this ARIMA. Okay, ARIMA. Okay, sorry for the handwriting. Too bad. P, small p, small d, and small q. Okay, PDQ class. So there are 3 orders here. P stands for AR. So you have here P orders of AR. Q, as we know, is the order of MA. And I here is the number of differencing. Okay, number of integration or differencing. So it's called D, PDQ. Okay, so when you see, for example, you're reading and then you see it's an AR3 process, let's say AR3. So that means this is an autoregressive process with order 3. Okay, MA2, it's an MA process of order 2. ARMA 22, order 2 for AR, order 2 for MA. All right, so let's first be familiar with that. Okay, let me clear the drawings. And okay, let's go here. So the first thing that we're going to look at is a time series with no trend. Okay, a time series with no trend is characterized by the mean of the time series is constant over time. There's no systematic increase or decrease in the data. Okay, and let's, I don't know where I place it here. All right, here, class. Okay, I don't think you have this, right? Okay, so once again, in the interest of time, okay, I'm going to share this with you. Okay, Control C. We're now moving towards, okay, uh, regularly, class, I would not have given this to you. I would have asked you to write it. Okay, but because we're just pressed for time, class. So first you have here, okay, you have here set that seed and a certain number here. Set that seed, class, this is used for generating random numbers, and it makes our random numbers the same. Okay, it makes our random number the same. So let's okay, let me just illustrate that for a bit. I'm going to clean this up. Okay, there's a function, class. Okay, I think I'm having a problem with my help function. Okay, let me just see. Uh, sample. Okay, so I'm typing here question mark, sample. All right, control enter. This is a function, and in the help window, it will it will give us the what's the sample function is all about. Okay, it's taking some time. All right, here. So sample, okay. Quite many. Okay. Here. Okay, from the base R, you have this sample class. Okay, if you can find that class, base sample. I'm just going to illustrate. Okay. All right. So what's a sample function, class? So this comes from the base package, and sample takes a sample of the specified size from the elements of X using either with or without replacement. Okay. So let's take a look at this, class. Okay, I just want to illustrate this. So let's generate an object called X. Okay. And let's say X is equal to let's say 1 up to 10. So I'm creating this object X and it's equal to 1 to 10. All right. So if I run this class, you now have this X. Okay. It's 1 to 10. Okay. And I'd like to get a sample from X. Okay. What size? Okay. So for example, I get a sample from X. So R will recognize this X. And then let's say size of 20. Let's see what happens, class. Control Enter. Okay. Okay, sorry. Wrong. Yeah, we only have 10. Okay. Apologies. Sample of 5. Okay. So the sample class will will generate class taking some elements from the data. Okay. All right. So let's increase our data a bit. Let's make X 1 up to 100. So we're increasing it. Okay. Now, once again, if I sample from X, which is now 1 to 100, okay, let's make it sample 20. So what will happen is that the sample function will get 20 elements from my X. Control Enter. There. So notice that this is random. Okay. This is random. All right. So if you run this class, you would have a different sample class. So if you try this, 100% sure we would have different samples. Okay, do you agree, class? Did you run this class? You generated X first, which is 1 up to 100, and then you sampled from your X 20 elements. Okay, if you try that, can you please tell me who among you got the same elements as I did? Yes or no, please? Did you get the same elements as I did, class? Of course, I'm very confident that no, that's correct, class. No, because these are randomized. These are randomized. However, class, let's do this. I'm going to set that seed. Okay. Sorry. Set that seed. Let's name it 1, 2, 3. Okay. And then just a semicolon. And then let's get sample from X. Okay. And then just maybe 10. All right. For the first sample of 20, we got different answers. But this time I'm going to attach set that seed to it. And let's sample again from X. Let's make it simple. Just 10 class. Control Enter. Okay. Could you please tell me what you got? What did you get, class? Okay. Yeah, correct. Okay. So what happened, class? Aren't we sampling from 100 elements? Okay, this one sample from X, just 10. The first one, class, we got different answers. But this time, we got the same, exactly the same. What differed? This one, class, set that seed. Okay, so whenever you're running a number generator, random number generator, okay, if you attach set that seed to that, and then we use the same numbers, it will generate the same sample. Okay, so I hope you got the meaning of set that seed. Set that seed is used to make sure that we have the same random numbers. All right. So for this one, let's take a look at this. Okay, I gave this to you. Set that seed 768. For as long as we have the same seed number, we're going to generate the same thing. Okay, here we're creating an object called notrend. And we're generating, class, this one, TS. This stands for time series. And this is from the stats package. And as we all learned before, the stats package is comes preloaded with R. So when you open, class, when you open your R or R Markdown, and if you check stats package, class, you notice that it's already checked. Okay. We did not load stats a while ago. It's already preloaded. All right. So stats package has a function called TS, time series. So it means that you're going to create a time series. And this one, class, is a random number generator. So we're telling R to generate random numbers, okay? Random numbers. And the numbers should be normally distributed. And how many? 120, okay? And frequency is equal to 12, which means that this is monthly, okay? Create data, time series data, okay? R norm, so the number should be randomly, normally distributed. How many all in all? 120. And the frequency is 12, which means 12 and then 12 and then 12, which makes it monthly, okay? So let's run this first, class. Run this first. Control Enter. All right, then you should be having this one. No trend, okay? No trend, and it's just a vector, class. It's just a row of numbers. And let's print it, class. No trend. Let's print it. Control Enter. Okay. All right. What happened here? Error time. Okay. I seem to be having a problem with my code chunk. Okay. Anyway, I'll run it here. Okay. No. No. What's the name? No trend. Okay. Here. No trend, class. I was having problem running it in my code chunk. Yeah, I seem to be having a problem with my code chunk. I can't see the the green button here. I'll check this anyway later. No trend. If I print this, class, okay, take a look. I'm sure we have the same, class. Could you kindly confirm, class? So frequency is equal to 12. So time series, this is time series. So R knew that this is January, 10 years, no? Because 120 divided by 12, that's 10. January, February, March, April, May, up to December. Okay, could you kindly confirm, class? Okay, at least for the first for the first January, February, March. Do we have the same figures? May I have your confirmation, please, if they're the same? Okay, thank you. So they're the same, class. We have the same figure here. Okay, so once again, the set that seed worked. Okay, and then let's plot this, class. Let's plot. Wait, here, this one. So we named the object no trend. It's just normally distributed. There is no trend here. It's not going up. It's not going down. Let's see what the plot looks like. Let me increase this. No trend. Control Enter. Okay. I'm having problems with my. Okay, let me highlight this. This is with trend. This is no trend. It's not running when I just show the line. So I have to Control Enter. There you go. I have to highlight the whole code in the line. All right, so take a look at this, class. You should have this, class. So this is our time series plot. So this is an example of a time series that has no trend. It's not going up, okay, and it's not going down. You see? No upward trend, neither no downward trend. So the average remains the same all throughout the time series. Okay. You got it, class? Any questions so far? Feedback, please, if we're clear about this, about the no trend, and we were able to generate that using the function TS, then R norm. Are we okay, class? So far? Okay, thank you. How about the others? All right. Okay, I hope the others are able to follow. If you have any questions, please don't hesitate to ask a question. All right, now, so let me give this again in the interest of time. Let's see if I can share with you this 4 code chunks chat. Okay, good. Sometimes can't Zoom is so stingy. Okay, let's first take a look at this. We have time to look at this 3 other codes. All right, we plotted, we randomly created time series data. Again, using the stats package, there's a function called TS and R norm. Okay, so this is from base R. Now let's take a look at this. Same thing, we're going to set that seed. Okay, and then here, we're first going to create a sequence from 1 up to 120. Okay, and then we're going to add the R norm, this one class. So it's inside the TS function, R norm, 120 elements, and we're we're setting the standard deviation to be equal to 10. Okay, so there will be fluctuations in your data, standard deviation of 10. Now, if you take a look at this, it will mean that your first value for R norm, you'll add 1 to it. Then the second value for R norm, you add 2, because this is sequence from 1 up to 120. So the last value, the 120th random number, you're going to add 120. So each of the elements there, you're going to add 1, 2, 3, 4, 5, 6 until 120. So that now will create the trend. Okay, it will now create the trend. Because of this, you're adding this sequence from 1 up to 120. Okay, so I hope you understand what's happening here, class. Sequence 1 up to 120. Okay, let's just run that one, okay, so that you know. Sequence SEQ 1 until 120. Okay, and let's print that there, class. Okay, so that's the sequence function. Okay, 1, 2, 3 until 120. And that's what we're going to add to the normal distribution class. So as you keep on adding 1 and then 2 and then 3, so that will have an effect as you go further. You're adding more up to the last one, which is 120. Okay, so it sounds really very I hope it's easy to grasp, plus. So I'm going to just run this first. The first one, set that seed. Make sure you run set that seed, control enter. Okay, and then I will not. Okay, anyway, let me trend. That's the object, control enter, and we should be having the same figures, class. That's the object that we created. Negative 4.6, negative 0.3, okay, etc. 18.8. All right. So let's plot plus our trend object. Control enter. All right. And it needs more space. Where's that? What number was that? Here. Okay. Here, class. Control enter. There. So you take a look, class, and this is a time series with trend. It's going up, going down. We could have reversed this from 120 to 1. Why don't we do that? Okay, let's just copy this, class. Control C and put below here, class. Control V. Let's put here negative trend. And let's make it 120 to 1. Okay, 120 to 1. So it's the reverse, class. All right, so if I run this again, class, I'll put here neg trend, negative trend. I run this. I run everything, control enter. Oops, sorry. Okay, it should be neg trend. Neg trend. So let's plot neg trend, control enter. Okay, there you go. Okay, should be negative trend. Okay, so we just reversed the sequence. So you first add 120, and as you go down the time series, you make it lower. All right, so it's almost time, class. For this one, okay, for this one, try to see what's happening here, class. This is seasonality. So here, we're putting the sine function. I hope you still remember your trigonometry. Okay, so we have we're adding some amplitudes going up, or movement like this, class. That's a sine function plus your R normal. Okay, so if I run this, class, control enter, okay, you'll notice that there's now this pattern of going up and going down. So this is additive seasonality. And for the last one, okay, notice that we're not adding, but we're multiplying the results of your sine function, okay, the sequence times the seasonality, and then plus the R norm. Again, if I run this, control enter, okay, what do you notice? This is multiplicative seasonality because the seasonality is changing over time. In the previous one, okay, the seasonality was just constant, up, down, up, down, up, down, more or less constant. But for this one, the seasonality is now increasing. It's now getting bigger and bigger over time. That's what we call multiplicative seasonality versus additive seasonality. All right, so let me pause now.